Welcome back to the Michigan Business Beat, brought to you on the Michigan Business Network. Chris Holman here, and we're coming to you from our studios at the Capital Region International Airport. We're going to stay in mid-Michigan right now. So one of the major indicators of economic wealth, prosperity, or the opposite, is usually vacancies in certain properties. It shows how businesses are doing and are more starting. So we're going to do a three-part series here, and we're going to use our experts at Martin Commercial Properties to talk a little bit about that. And our first guest is Chris Miller. He's the Senior Vice President of Martin Commercial Properties. And Chris, it's good to have you on board. Let's talk a little bit about this from an industrial standpoint. Tell me about industrial vacancy rates. How are they doing, and what factors are driving any demand there might be in the market?
Yeah, sure. So, well, thanks for having me, Chris. The industrial market here in mid-Michigan area is healthy. We do a report twice a year as far as vacancies in our market. Our second half of 2024 just came out, and vacancies have ticked up a little bit, mostly due to a couple large buildings that have come online in the last 6 months. But manufacturing, e-commerce have all been active in our market and have kept our vacancies somewhat in line. We historically, the last few years, have been in single digits in terms of vacancy. We just went over 10% this last half due to those large buildings. But I expect when our next report comes out, first half of 2025, we'll be back into the single digits. So we're a nice steady market, things status quo for the most part.
I'm personally a little bit worried about supply chains and the new tariffs being put on, et cetera. How are companies in that industrial sector? How are they adapting to those kinds of challenges?
Yeah, so kind of the buzzword right now is nearshoring and onshoring. We've seen from a supply chain standpoint, with COVID, that woke a lot of people up to disruptions that can happen, via pandemics or geopolitical risks or trade wars. So, a lot of the manufacturing that's being done in China, a lot of people are looking at, nearshoring, thinking, Mexico or even onshoring, which will hopefully, help our manufacturing base here in the States. There's a lot of factors at play, but that's one we've really seen kind of an early onset of.
What's kind of cool is some major companies have made some real investments. You're talking about GM. I know Neogen, an international company housed in Lansing, they put a lot in Gestamp, which is way
Yep.
bigger than people realize.
Yeah.
They keep expanding at their Mason facility as
Yep.
well. How do those projects affect what's going on?
Yeah, so typically when we have a large scale project like that, large investment from a big company, it spurs other activity, a lot of times from supplier base. So those are really a positive for our market. Hopefully, we'll see more of those here, especially if we can kind of diversify our manufacturing base and our industrial base here in Lansing. I think it's only going to be a positive for the general area and our industrial real estate market.
It's kind of interesting, and I'd like to go over this very quickly because a lot of people don't understand what property management means, and especially in the industrial sector. Why don't you run down that? Because it's a pretty broad array of services.
Yeah, so there's a lot of stuff that goes into these properties, the day-to-day management operation of these, and as far as a property management goes, assisting owners in the operation of their properties, dealing with tenants, collecting rents. That's another division of our company. We're vertically integrated as far as brokerage, property management, development, and those are all services, that we can provide and help our clients with.
Chris, do you guys get involved at all in security?
Security, no, that's not really part of our bandwagon. Our property management deals with third parties relative to that, so it's part of our property management operation.
But it's kind of interesting because you do look at things like electrical circuitry and make sure that all those things are not causing downtime for an industrial client. I mean, that's big money when you close down a line.
For sure. I mean, downtime is lost money, and you'll see a lot of redundancy in a lot of these facilities as far as power, all that type of stuff to make sure they're up and operating if even if there's issues that are affecting kind of the broader area.
And I remember asking a lot of people what they saw in the next 6 months just before the pandemic, right? So I know when I ask people to kind of prognosticate, it's all contingent upon weird things that may happen. Are you looking at a fairly good 25 in the industrial sector?
Yeah, we're optimistic as far as e-commerce and manufacturing continue to be factors in our market and continue to drive growth. And again, if we can see a little bit more diversification as far as our users in our market, that would be great. But all in all, yeah, we're in a very healthy market, and we expect that to continue in 25.
Well, let's keep it continuing. All right. Thanks so
All right.
much for joining us.
Right.
We appreciate it.
Thank
Chris
you.
Miller, Senior Vice President at Martin Commercial Properties. And you've been watching all this on the Michigan Business Beat on the Michigan Business Network. I'm Chris Holman. We'll be back with more.